are doing Reg C offerings on the platform and on various platforms, and also do a lot in the space of Regulation A and 506C Reg D offerings. So that's a brief overview of me.
I assume it's my turn to introduce myself.
Go for it, John. Great to hear from you.
Okay, my name's John Evershed. I'm CEO of Fat Cat Club. It's a new platform. It hasn't yet launched. It's soft launching in March and then opening up to investors in April. My personal background is that I've been in television and film primarily, doing a lot of fundraising through traditional means, raising venture capital. It's very much a digital facing company that I operated for many years prior to this. So I've been on the ground trying to raise money for entertainment projects now for the better part of my career, as has the entire team at Fat Cat Club. And I have to laugh though, because the name for this panel is Raise Up to $5M RegCF. It's so cryptic. It's like a password for your bank account, like a suggested password. And what we're trying to do here is kind of open up crowdfunding and make it more accessible, not just for issuers, but for investors. And these new regulations opening up to, from 1 to 5 million, put it now in a place where you can do substantially more to kind of help yourself raise money for financing for entertainment projects. That's specifically where we're interested in. I sit on several boards. I'm studios, that kind of thing. And I, again, my background is very much like in the trenches raising money for entertainment financing. You're muted, Marty.
No, it's okay. My name is Oscar. So there you go.
Oscar,
now
sorry.
Everybody gets to know who I
Sorry,
am.
I beg your pardon.
No, it's okay. It's okay. Welcome to the world of online. We all, there's a lot of buttons to hit, but now you met the panelists. I think it's for everybody that's here listening on. There's so many different variations of Regulation CF, and John said it best. It's not meant to be cryptic, but it's so amazing for all of us who've been through this. I don't know about you, Marty, but I was just thinking about the other day. I'm already going on my 11th year. 11th year. I actually had to remind myself I'm on year 11, and people were like, "What are you talking about?" Yes, year 11. I mean, it goes that far back when I met David Wield and many of the others. So, when the Jobs Act was introduced with Regulation CF, fantastic regulation, allowing companies to raise $1 million. A lot of hard work by people like Marty Tate, the platforms like Fat Cat and others that are in the market. But now they've given us this gift to raise up to $5 million, and lots of questions are arrived. So today we're not going to go deep dive into everyone, but we're going to highlight some of the big components of the 5 million. And we're going to start off with, first of all, I think personally, and obviously I'd love to hear both yours, John, and Marty's view on this. I believe when the regulators change it from 1 million to 5 million, something dramatically changed in the capital raise journey that a company goes through. Because before, people used to say $1 million, oh, that's just for startups. We're in a different ballgame altogether. What do you think of that, Marty?
Yeah, I think it's a game changer, or potentially could be a game changer. The crowdfunding or a Reg CF raise for the last several years has sort of been I don't want to say a substitute, but it's been used in a lot of cases as the friends and family round, right? Or an expanded friends and family round. You can raise up to $1 million. A lot of states have exemptions for up to $1 million raises. So for friends and family type things. So it kind of filled that slot, allowed you to bring in, allowed you to advertise and bring in non-accredited investors into that raise. But there were some problems with it, and we'll talk about the amendments and some of the fixes that were made in the process. But by allowing it to go up to $5 million, you're essentially saying, hey, this might not only be used for a friends and family round, it might be used for a seed round or even a Series A round. I mean, you could have a credit or institutional investors, VCs, come into this, participate in this round. It'll be interesting to see, and I don't want to, you know, rain on a parade, but I think that, you know, even though companies could raise up to $1 million, a lot of companies did and did it fast, and some companies still just raised 250, and I think that, or 100,000, and you'll still see that. I think this just allows you to expand that, you know, what you can do. I think I'm a big fan of Reg A plus, but I think this will cut into kind of that market as well, because you know, if you can raise up to $5 million just by filing a Form C, it's definitely a lot more efficient way to go.
Agreed. And John, obviously you're the newcomer in the game with a funding portal. So obviously you didn't come in when it was $1 million, now 5 million. Why do you think this time it's different?
Well, you know, we're in entertainment, right? Entertainment, good creators or good creative IP typically has large social media footprints, right? So you're able to tap into that footprint. And there's a lot of these folks that you've seen on Kickstarter, for example, can raise easily millions of dollars around projects. So I think it's a superior offering, though, to like a traditional Kickstarter raise, in that you're really engaging your fans. Because if you think about, like, you know, a football game, the stakes are raised when you've got $50 on your team. And similarly, I think that will be the case, that, you know, you'll have a very active, large, engaged base of fans, or fan investors, we like to call them, that, you know, can participate in your products. A lot of entertainment projects now easily cost, you know, in the low millions of dollars. Indie features, video games, that kind of thing. These are all areas where we'll be focused on. So I think it's a little bit like what Marty's saying. It just opens up the door to more actual funding of entire projects from beginning to end. And so I think, you know, an important step here. It's not like this, you know, it's still hard to raise money, and you still have to market it, and we as the funding portal have to market it. So I don't know that it's a cakewalk. Like, we'll still be experimenting, quite frankly, with lots of projects that are in the low hundreds of thousands. So I think that it just sort of opens it up to larger opportunities with bigger social media footprints. Like, we're engaging now with like major, you know, household consumer brand type of projects. And I think that's one of the differences, right? They see, oh, okay, I can do a fundraise and you know, source several $1 million around a project. And so I think before that, though, it was a lot more small to medium-sized players.
I agreed. I think the view that I bring into this, and I hope it'd be interesting to see what you guys think, is that I think for many of us, we saw, and Marty's right, we saw in the early days of Reg CF, we saw a lot of 100,000, 250s on average. And it was only till, I think, mid 2020, we started seeing a lot of $1 million races just started coming to happen. And I don't know if it was because of the chit chat or the 5 million or whatever it was, it just spurred it. But just so everybody understands who's here today, the attendees, just so you know, PitchBook, Crunchbase never ever wrote about the Jobs Act, ever. In fact, it was always hovered around us or the industry. For the very first time, PitchBook wrote an article about Reg CF, that it could actually have a major impact on a Series A round. It's a brand new type of company that's coming in now, having a choice. I mean, this is about choices. We're not suggesting venture capital will die. That's just not going to happen. But imagine if you're a company that can make a choice and say, I'm not ready for Reg A yet, but I need this still to get myself seated properly. Boom. I can now raise up to $5 million. It is different. I think the platforms are going to operate differently with its type of client. We're already hearing that. And another dynamic we're seeing is that it's not just the platforms where companies will be able to raise their money. Broker dealers are now coming in to this sector something we had never seen before. Broker dealers, FINRA registered broker dealers in the past would say, you know what, we don't touch Reg CF. It's not, but now we're talking about $1 to $5 million. Wait a minute, that's my Series A client. I want to keep them with us, right, Marty? I mean, we're seeing that already. So I think we're in the early days. We're still going to get that same 250 million, but I think over time, the fact that more mature companies that already raised their seed and now looking to do their Series A, opting to do this, because once they opt this model, the whole game changes completely how they keep moving forward in their capital raise journey. Meaning, you do a Reg CF, the likelihood that you will do a Reg A is about 90%. I mean, very, very high. So that means you're in the journey of always working with the crowd. So, I mean, what do you think about what I in those points, Marty?
I agree. And, you know, one of the things that just to build on something John said is that a lot of times people, a lot of issuers would look and say $1 million is great, but I need to raise 5. I need to raise more than that. And I think this will allow them to do that, but we've been doing over the last several years. I don't know how many of these we've done, but you will do a simultaneous or a concurrent Reg CF 506C. So you're kind of juggling both of those offerings. You're bringing the accredited investors in the 506C, the non-accreditors in the Reg CF, and this can potentially just replace that. Everybody just comes into the
100%.
And you know, and one of the changes that, and we'll probably talk about some of the other changes, is for accredited investors. There's no limit. Before they were, you know, there was limits on how much even an accredited investor can invest. So they removed the limits on how much an accredited investor can invest, and so that solves that problem as well. But yeah, I agree. I think that it'll be really interesting. I think that there's a lot of potential, and a lot of times companies don't need, you know, I mean, I'm working with one company right now, and they need $5 million. And they said, hey, if we can get $5 million, we can execute our entire business plan, which is before they'd have to do a Reg CF and try to get in some seed money. And then they would try to have to go out and get a venture capital, like a Series A round from a VC, or do a 506C or something like that. This solves that problem. So I think it's fantastic.
Yeah, I concur. I mean, this is one of the most important, and I think people need, I know for people that are here today, why is this important? Because you need to understand the journey of capital raising. Capital raising is a journey, and you have to understand each step you take, every decision you make. When you go to John's funding portal and you go to the Reg CF, you raise your 5 million. You need to think about what your next strategy is, because when you're working with Marty, your lawyer, you're creating a legal structure that's going to allow you to have those thousands of new holders, whatever format you're going to utilize. And then you need to think about your second raise. You do need to think about that. I mean, there are not many businesses that after 5, that's all, I'm done. I mean, if I said that, it'd be, but the key is that we need more additional capital. So sorry, John, I didn't mean to cut you off there. You had a comment on that.
Yeah, I was just going to expand on one thing we're finding, like entertainment financing oftentimes is slate financing. You spread your risk out over a number of projects rather than one lone project. And I like that. We're sort of finding that that's what people are coming to us with. Hey, I want to do 3 video games at $1 million each, or, you know, that type of conversation. So then it's a superior offering for the investors, because they now have stake in 3 projects versus 1. So there's a benefit that comes from that. The other thing that I think is interesting is that there's kind of the sort of Robinhood.com effect about people investing online on their phones, like that sort of trend between that and Kickstarter, obviously, I think has made people just more open to the concept of investing, you know, their money. And the thing that's cool about these are that these are projects, right? So our platform is focused on raising financing for projects. So that's like a more sort of, it's not guaranteed. Nothing's guaranteed, right? We have to be very careful about what we talk about when we're marketing the platform, and similarly what the issuers are saying about the raise. But nonetheless, a project-based financing, like we're talking about, the product's going to get made. It's going to go to market. It's going to get sold, and either it makes a profit or it doesn't. But that's a shorter window for like a return on investment for investors. than maybe an equity investment or friends and family around in your uncle's company type of thing, right? So I think there's some benefits here to this model for raising financing for the investors that's kind of interesting, and that they have a propensity to go online and start investing more casually almost than they used to be, if that makes any sense.
Yeah, it does. So we're going to move the conversation a little bit over. So we now talked about the high level overview, and Marty, thank you. Marty brought in a couple good points, and I'm going to throw in a third one. We're going to talk a little bit of some of the real specifics about this new amendment that are very subtle but very important. And it's important because, before you would go to your lawyer, I want to do a RegCF file a Form C, but you need to think about the journey of your capital raise. I firmly believe that, because if you make the wrong move, you may not be able to unwind some things, or you could always unwind. But because of the number of holders, you really need to think about this. So I want to switch that conversation over to that. And because there's three things that I've seen that are going to be important. One, obviously, it's getting increased to 5 million. So that's one. And obviously, John, how this will impact you as a funding portal making this decision. The second is the legal structure. So I want to talk about the legal structure right now. So, which is the SEC has allowed an SPV vehicle to be utilized for a RegCF. And I don't know about you, Marty, but I spent a lot of hours trying to explain to people it is an SPV, but it's not like the traditional SPV. So why don't we give everybody kind of an overview? Obviously, you're the lawyer in this part, and then let's describe what the regulators intended for a RegCF.
Okay, yeah, and I think right alongside with the increasing this to 5 million, I think this is the change I lobbied for. There's a lot of us attorneys out there that were writing letters to the SEC. This is the change that we really lobbied for. What it does is prior to this change, in a RegCF, you had to invest directly into the company. You couldn't, there was a prohibition against using any sort of special purpose investment vehicle. With this change now, what an issuer can do is they can create a standalone SPV, an investment vehicle that all of your crowdfunding investors can invest into and buy equity into. And that one SPV can then go and invest into the issuer, thus making it so you just have one shareholder on your cap table versus hundreds. So it solves that question. The other issue that's right alongside, and Oscar will agree with this, is that SPV is exempt from Rule 12G, which is the rule which requires if you have more than 2,000 shareholders or 500 non-accredited shareholders, you have to register as a public company under the 1934 Act and become a reporting company. So so now that SPV can stand alone and you can bring in equity holders. I think one of the things you saw in RegCF world is a lot of these offerings were done as safes. And one of the reasons why they did that, one is valuation allows you to go in and not have to peg a valuation, but the other is those investors are not equity holders, so they're not coming onto the cap table. Therefore, you didn't have the 12G problem. This solves that. So now you don't have to use a safe. You can come in, they can come in as equity holders into this SPV. That one SPV can be a single shareholder on your cap table. So to me, this is the one that's
it's the one that you like the most.
Yeah, it is. To me, this is a really big deal. Like I said, this is the one that myself and other lawyers in the space have really lobbied for. So I'm excited about this.
Yeah, I'm excited as well. I mean, my only comment to those who are listening: yes, all those holders will look like one shareholder in the company that you're operating, but you're still responsible for managing the other company or the SPV, and you still have the same responsibility to all of them. So it'll look like one here.
And that's where Core Connects comes in, right? That's where Oscar helps.
Well, thank you for that. I appreciate it, but I just wanted to make sure people got that, because some people think that, oh, I'll only have one shareholder. I don't need to worry about the 3,000. No, you still have to, report to them. What you've been given is the opportunity to include one shareholder, why that may be. Remember what I said, your journey to capital raising, right? So if your journey of capital raising is to use RegCF, raise $5 million, and you know that if you hit your milestones, you could be venture backed, well, this could be a game changer for you because the VC will only see one shareholder there, but you're still responsible for managing the SPV all the way through, and to make sure that it's done properly. So, John, from your point of view, I mean, you and I've had this discussion regarding SPVs, how I feel about them. I'm, obviously I'm agnostic, but you're running a funding portal, which is going to be very exciting, something new. So how do you see the structure playing out for you?
Maybe it would help if I just kind of walk quickly through the process of like identifying a project, how it works on our platform, because I think we, just to back off a little bit and say, okay, well, what are we really talking about here? So, the idea is that we look at a lot of pitches. Okay, they're essentially, they could be a video game, they could be a movie, they could be an app, a board game, any number of entertainment projects. You present us with the project, you present us with some projections, you present us with like, hey, this is why this project's great and we should do it. We look at it, we have a green light committee, they look at it and say, yep, we want to put that up on our funding portal. You create essentially something like a Kickstarter looking raise for but with the expanded discussion about your offering, the shares that you're selling in your project, and post that on our funding portal. That's the only way that you can raise money under these regulations is on a registered fundraising portal like FatCat. Then you raise the money, much like Kickstarter, the money goes up into an escrow agent. FatCat actually never touches the money the whole way through this process. You raise your money on the platform, you market it under certain regulations. You're successful, the money gets dispensed to you. FatCat takes its fees, much like Kickstarter during the raise. Then you make your product, okay, with that money or that other money plus the money you've raised. Then you work with a transfer agent. In this case, Oscar's company is going to be our transfer agent, and they're the ones that collect the money from the issuer once they start to make a profit and distribute it to all of the investors. So again, back to Marty's point, it shows up as one line on your books, and it's the transfer agent's responsibility to distribute it. Where I see it going is can we as fundraising portals bring as much sunlight and transparency and reporting of that that whole cycle from you creating your product to you distributing it in the marketplace and collecting the money around it and distributing it to the various investors. I sort of see that as like an area of opportunity where going forward we'd like to kind of really differentiate ourselves, because entertainment business is somewhat, especially movies and television, fraught with the what's the definition of net and that kind of thing. So like what we'd like to do is bring as much transparency to that last piece of this cycle that you're on with your fundraise in terms of collecting the money and transferring it to the investors.
Thank you, John. That was great. Sorry, I have to take a sip of coffee there. By the way, Marty, was that a chicken in the background? I could have swore I heard it. I heard something going, cock-a-doodle-doo, we're out here.
No, that's in my backyard, actually.
Oh, that's yours. Marty's view looks fantastic. I love watching the sunrise.
I think there might be a rooster or 100 out right now. So
I love it. Okay, well, see, we bring you everything. We bring you roosters, we bring you birds, we bring you coffee, all here. So, okay, so now we
plastic red rooster.
There we go.
Thank you. So we talked about the SPV component of it, which plays out again. It's really important for everyone to be talking to a legal advisor who knows what this instrument is, and really be candid with yourself about what it is that you're doing in your journey of your capital raising, because the SPV is not for everybody, right? So, if you're going to do a Reg A, it doesn't make any sense doing an SPV. because you're going to have to unwind it anyway, right? I mean, to leverage that additional crowd. I mean, it if you want that whole crowd coming in. I mean, in my view, I think it's just you could keep it, but the whole idea is if you got 5,000 holders already in your Reg CF, you want them empowered to do the next round, right?
Yeah, what you're referencing there is, so you would want to include them and have those shares be part of the Reg A plus, so that, especially so they wouldn't be unrestricted. I mean, all of those shareholders in that SPV would be hold restricted shares and wouldn't have the benefit of the shares issued in a Reg A plus. So that's why you're saying
Correct.
you'd have to unwind that. Yeah, and so that is something to think about, for sure. And like you said, I like what you're saying. It's a journey, and you have to think about what your long-term plans are. Like I said, some people, hey, and I'm sure a lot of John's clients, developers of video game developers, they might say, hey, we only need $2 million to bring this project to market, but other companies are going to need $50 million or some $75 million. And so, yeah, I think it's always good to go into it with the long-term goals in mind.
I agree. I think a lot of companies, that's where accelerators come in, they can guide. I think this is a great opportunity. Yeah, you need 2 right now, but you're going to need this X to really, if you're going after this market. But it is critical. We're emphasizing this a lot personally, is that you speak to a legal advisor. There is, as I said before, there is one more addition that we didn't have when Reg CF was first introduced as an issuer. Is that you do have the choice now of the funding portal or the broker-dealer. The broker-dealer doesn't necessarily run a funding portal. So this is a very different strategy for companies who don't want to be among others inside a crowd environment or more mature. So Reg CF, like I said, it's been so flexible. And now I'm going to bring it into something that really I think is important, because the accredited investor could play such a vital role in Reg CF, and we weren't allowed to. Well, we could, but they were limited. Obviously, the regulators heard the cry, saying, "Okay, if we're doing it for Reg A, why can't we do it here?" And they're doing that, giving them the ability to have unlimited. So obviously, this creates a bit of a different structure, but. I'd like to hear your thoughts on that, Marty, because I know that's something that's dear to your heart, allowing more investors coming in.
Yeah, I think that, and one of the benefits traditionally about Reg CF, and John can appreciate this, is, and one of the talking points and pros of it is, with a lot of projects, especially something like a video game, you're not only getting investors, you're getting clients, and you're getting fans of that. So they're going to be coming in. So I think that this allows you to expand that. It allows you to say, we did an offering for, and this works particularly well with consumer products, as you can imagine. They're coming in and they're investing in the company. They're also, they're going to be more likely the ones that are out there, not only buying the product, but also being, evangelists for that product. So I think that's a benefit that we'll see. One of the things, and I'm going to shift a little bit here. One of the things that the other changes, and maybe I'm getting ahead of you, Oscar, but I think this works, is this kind of goes along with what you're saying, is one of the other changes is, like a Reg A plus, the new regulations allow the issuer, the Reg CF, to test the waters, which is basically saying, hey, we're thinking about doing a Reg CF offering. If we do, would you guys be interested? That's one of the big advantages of Reg A plus, is you could go out and say, hey, we're thinking about doing this, and you could get solicitations of interest. People could say, hey, I'd invest 10,000, I'd invest 25,000, and it allowed them to again test the waters, find out what interest was out there before they went to the time and expense of putting that offering document together. So now you can do that with Reg CF. Prior to this change, you couldn't even speak of the offering until it was live with the SEC. So now I think that's going to be a big difference too. The Fat Cats and other portals are going to be able to put something up saying, coming soon, and people can show their interest in that. I think that's I think that's a huge change and a great change too.
No, it is. And obviously for in particular for the funding portals where often they're working on so many deals and they're not able to say anything before in advance as they're prepping them, I think it will. It'll show that there is a great pipeline ahead. Obviously, coming back to you, John, how do you see the accredited investor, or do you even foresaw that now that you can invite them and they can put in an unlimited amount of capital where before they were restricted? And again, they just have to for them, it's just as investing as easy as a non-accredited. But
Yeah.
did you foresee that? Is that going to help from the funding portal perspective?
We believe that it will evolve over time, their involvement. It's a little like that online lending, where eventually the bigs came in because they saw the obvious success that was occurring. So I think that we have two marketing funnels, one focused on higher net worth institutional investors and another funnel for sort of fan investor consumer types. And the honest truth is that we, hope both will show up, but we're not sure at what levels early on. So there's going to be some experimentation and trial and error here in terms of finding those investors. We do have like two targets, and they're different signals that are getting sent to each of those targets, right? But we think that it might start with more consumer level participation, but that eventually some of the larger institutional money will come into play, the accredited investors.
Yeah, we're definitely seeing them entering the Reg A already, which is good news. So obviously it would be nice to have that same trickle effect. And again, gotta love PitchBook promoting it to the VC community. So it's already alerting them to this. So obviously, look, we've talked about the great news about it. It's been increased to $5 million. We have an SPV vehicle that we can utilize. You can use the funding portal to raise your capital. And one thing we didn't touch on the funding portals is there are going to be different variations of it. And John has been alluding to his particular one, and we'll get to that as well. The fact that as a company, you have a choice in planning your journey. So one thing that I maybe for those that are here or may not be aware. So as we said, we encourage you to work with the lawyer that you have, your legal advisor. And I'll come back to you and John because you also assist here. But let's talk about getting started. Is the Form C going to change? Is the process going to take longer? And should the company be going either to the funding portal first or the lawyer? So I'll start with you, Marty, again.
Yeah, so I don't think the process is going to change that much. And whether you go to the lawyer first or the funding portal first, is probably doesn't matter. You need to have a funding portal on board before you can do this. So a lot of times we'll get a call and somebody will say, hey, we want to do a RegCF offering. And I introduce them to a half dozen funding portals that I work with or represent. And but those funding portals have to approve them and say, okay, yeah, you're somebody that we want to take through the process. So I think that's your initial barrier to entry. So so whether you start with either your lawyer or the funding portal, I think isn't that important. But then going through the process, the Form C, there weren't any significant changes to the Form C. So that's still a very straightforward document. I would suggest, and this is just the lawyer in me, I'm thinking, I kind of have a rule that the more money you're raising, the more disclosures you need to provide. It's more of a, cover your backside approach. So I would think that Form C might get, lawyers might, like myself, might be tempted to try to bulk it up a little bit more with risk factors and disclosures. But the basic document is the same, and that's one of the benefits of that. It's a document that's not reviewed by the SEC. It's just filed with the SEC, so it's the process is definitely a lot more cost effective than doing a Reg A plus offering.
Yeah, by far. And John, from your end, obviously you're the funding portal. Funding portals have traditionally been taking kind of that responsibility, some of them without the legal component of it, but where do you stand with that, and
Yeah.
how will your process be?
I think, we'll hold their hand going through that process. And I failed to mention it actually when I described our process. It's at that stage where it's like, okay, we're deciding to raise the money on our platform, and the issuer, in our case, the creator, is going to have to fill out this Form C, and they should engage with an attorney. I'd recommend it. And again, to Marty's point, the more money involved here, the more legal help. But maybe if you could just really quickly quantify, Marty, like the amount of time that report, like how big is the Form C effort overall, and then what's the reporting obligations once they've filled out their Form C and throughout the project? I think that would be helpful.
Yeah, happy to do that. So the Form C itself is a lot of companies. We've kind of taken different approaches. There's several of the issuer or platforms out there have a sort of template model that you fill in a bunch of information, and it populates a template, and they use that. We've worked with a number of the top platforms out there, and it basically reviewed their Form Cs, had our lawyers review those Form Cs, and there's typically a fixed cost for that. We've had other platforms where we actually, and a lot of times when an issuer just comes to us and say, hey, we want to do a Reg CF offering, we'll prepare that. We have a basically a template that we can use, and we can prepare that. So that remains pretty straightforward with regards to the, and it's basic information about the company, their financial information, their officers, prior securities offerings, their capitalization, other disclosures, employees, that type of information. So once that's been filed, then you're required to do, file updates as in connection with changes, or as capital is being raised, if you've met targets. If you increase the amount you're offering, you file an amendment, and then you're required to do annual reports. So, and this has been something that within the legal community that we've kind of looked at and said, a lot of people haven't. This is one area where the compliance has not been great, but you're required to file an annual report that gives an update on not only the capital raise, but also your financial information. This is the compromise, because you're not a public company, but at least you're providing those investors ongoing disclosure and information about the company and their investment.
And I just want to touch on that for those that are listening. This is really important. Budget for that report is not a lot of money, but if you don't, I need you to understand, you could lose your status. You could be in default of Rule 12G. So, not adding that in could be, that's why I'm emphasizing this, because what happened in the few years, we've learned a lot. The SEC is not going to give us that same pass going forward. It's not. $5 million is not a small amount anymore. So it's imperative, the Form C filing and understanding all the obligations ongoing. The partner you have will help you, but you need to make sure you budget for it on an annualized basis, because it will have an effect on you breaking your 12G rule, which if you do that, you're a fully listed issuer, Franken-Dodd, full reporting. You never want to lose that status. It's imperative. So, sorry, John, you were going to add?
No.
Oh, sorry. Okay, so we covered, today's session wasn't really to deep dive, but we gave everybody an overview of what's emerging. Everybody's getting ready. March 15th is the date that it goes live, which means that, if you're a company looking to raise between $1 and $5 million, this is a great regulation. And as we indicated, you need to start with these basic steps. There's a lot of elements to it. It's not meant to be confusing. It's going to take people a while, but you do need to be prepared, and you need to be able to budget for it as well. So I'm just going to touch a few minutes on that, because a lot of the times, people believe that, okay, crowdfunding, I just put my deal up there and I'm ready to go, and cost me nothing. There is a cost associated with that, and we want people to come in with their eyes wide open. Obviously, the funding portals are going to guide you in some of the areas, but as a company, you need to come in prepared. So, you know, the numbers, I don't know if you've seen this, John and Marty, but for $1 million, they were indicating if you were raising $1 million, you should be budgeting about $25,000. So it was because you're going to do marketing and you got some, you know, legal preparations and stuff like that. So you kind of have a benchmark. Obviously, the more dollars you have to work for your marketing will work. John, have you guys created a budget item for your issuers, or are you going to take on that burden with them?
No, we're going to take on the burden of most of those things. That marketing number sounds low to me, 25K for $1 million, just for what it's worth. I suspect that, you know, you might want to earmark a little bit more than that for marketing, but we'll also be marketing the platform in parallel with you marketing your individual campaign on the platform. And then you've got these reporting obligations, the cost of the reporting obligations ongoing. And you know, and the more that you inform your investors, I think the better. Like, you know, the more that you can talk about how the project's progressing and keep them in the loop and hitting your milestones and when you're going to market and how it's performing in the market, the more reporting you can do, I think the better off you'll be with your investors and maybe raise the next round, you know, around, you know, do your next crowdfunding for your next project. So I do see like there's a momentum thing there. Like if you look at Kickstarter, for example, the successful raisers are the ones that raised before. Like it's fairly direct. You know, the people are using Kickstarter now to literally as a form of distribution for certain products like board games and stuff like that. And I think similarly we'll see an evolution like that in terms of repeat issuers on the platform.
No, I agree. I mean, look, for Reg A, it's interesting you would say that we provide them a very realistic budget so they can get ready. And that's why they go to RegCF to raise it. But we're forgetting to let them know they need a budget there as well. But it's a good point. There are more companies using these regulations habitually year over year. And the ones that do it right budget properly. You're dead on that. And the ones that are unsuccessful underestimate what the market is. Marty, did you have any other comments on that?
No, I think that, you know, we have this conversation a lot more in connection with Reg A plus offerings, you know, talking about, people ask me what what our fees are associated with that. And I always say, well, you know, that's one thing we've got to have a pretty big budget. But I think that one of the points that needs to be made with regards to these RegCF offerings is, and it's an important point, and I think you hit it with saying you have to have this marketing budget, but platforms are great. They are not marketers. They, you know, by putting something up on a platform or a funding portal, it doesn't mean that, you know, we haven't had, and I've been saying this for years now. And I keep hoping it'll happen. And I guess you're seeing it more and more, but there still isn't this mass number of investors that are just cruising funding portals trying to find their next deal. You as the issuer have to push the deal. You have to get your networks, you have to use your social media, your contacts, and drive your investors there. And the funding portal will help. They'll have their lists and their customers, and they'll be able to recirculate it. So there's something, but it's not a and I every time I say this it dates me, but it's not, if you build it they will come. It's a you have to do the work. And so having a budget for that, having a marketing team, having, and there are some fantastic third-party marketers that will help you, market your deal and work with the platforms or the portals. So that's a very important thing. The legal cost in all of these things, for better or worse, is a lot of times your least expensive part of the race.
It is actually.
And how many times do you say that? Yeah,
I say that a lot, and I commend you guys, the entire legal community. In fact, for a Reg CF and a Reg A, the lawyers are the least paid for all what they do for us. But you touched an interesting point there, and I want to finish it off because us at CoreConnect, we deal with a lot of clients. We have 120,000 companies in our platform, and each time they come back with us with stories. And it's really interesting, but people don't realize a lot of the funding portals won't even start supporting the company, even though they've approved you. They won't start supporting you to bring it to the bigger crowd until you reach the minimum threshold. Have you seen that, Marty? So certain portals will say, look, you need to bring in $200,000 on your own before we go out and start bringing our, so you need, this is where marketing becomes very important. So if you go in thinking that, oh, I'm just going to get listed on the funding portal, I'll get all the users, you're just hoping that you're the shiny light they'll see, but it's not, the platform's not going to get behind it until you reach the minimum. They want to see what effort you're putting in to bring in that traffic. So something everybody's got to keep in the back of their mind, that it reminds me once again that I think we're due to provide a budget for everyone, realistic budget now on all the costs, including the annual returns, because it's the number one issue. Obviously, we're going to have a year from now if we don't address it properly for everyone. So we're getting down to the last 15 minutes or 12 minutes of the webinar today. There's some great attendees. So this is the time, if anybody's got some questions, you got two great panelists here that will answer your questions. Obviously, otherwise, we'll be more than happy to pass on your contact details to them. And we will actually have a website where you can see their details, their profiles, access, so you can reach out to them. But I'm extending it to any of you today that are here. Do you have any questions? Okay, we got one. Here we go. So, hi.
Yeah,
you're
hello.
on. Yes.
This is Dr. Hai from Toronto. I have two or three companies in the different field of raising fund. One is pharmaceutical, one is cannabis, one is natural health products. I want to know the overall cost of preparation, that to qualify to register and successful fundraising, how much the fund we need to invest to get that target.
Okay, so
you can send us the outline that you will do this, and these purposes you need the money, minimum money. I understand that you will get some percent of the commission on the raise fund, but to get the raise fund, then you get the commission. But before that, we have to spend money, right, to qualify and get funding. So we need to this part. How much actually cost? No hidden cost, no other cost. So halfway we should not be problem for funding to reach this target.
Not a problem. So I'm going to put you on mute now. So so it's a good question, but first of all, I don't know if you guys caught it. He's calling in from Canada. So this is a question that I'm glad he raised his hand, because it's come up before. Myself being a Canadian, I'm going to take the first point to this, because this is really important. So I know there's people out there in Canada right now promoting, hey, all you got to do is incorporate in Delaware, Nevada, Wyoming, and you're way to go. No, you're not. It's not that simple. Again, remember what we talked about at the beginning? And that's no matter what country you're coming from. It could be Canada, Australia, or anywhere. Just think about what it is that you're doing. Think about the strategy of your capital raising. The regulation CF was intended for US-based companies, operational companies in the US. Marty can talk a little bit more the legalese component of it. I'll give him a minute here. But when you make that, when you do that, and your major operations are in another country, and you do decide down the road to do a Reg A, so this is the consequence. One of our other lawyers on our ecosystem, Sarah Hanks, wrote an article, The Consequences of a Foreign Issuer Tapping into Reg CF by Creating a Sub and then wanting to do a Reg A, and how it blows up. Because the regulators, as Marty said, you're just filing. They're not reviewing your offering. But when you file a Reg A, they will review everything. And that's when they'll discover that you are a sub of somewhere else. So it's really important that people get proper legal advice. This is not to discourage companies from using this regulation from other countries, but it's just to make sure you're aware that it does require a plan in when you're dealing with lawyers. Marty, I mean, have you run into this yourself?
A little bit. We get this question. Obviously, people want to take advantage of it, and again, I think going back to the theme that you've kind of said is what's your overall plan, what's your overall fundraising goal. If the solution, or if all you're trying to do is raise a little bit of capital by plugging into a U.S. market, I think it's possible. But you're right, there are long-term consequences if you have additional plans down the road. It is something we've dealt with a little bit, not it's not something I've dealt with a lot. A lot of times the foreign issuer, we get a lot of questions, and then it kind of we talk them through it and it goes away, but or they decide to take another route. Going back to the, he was talking about the cost, and I presume that was a marketing cost that I was asking about, and maybe that's a question that you can better answer. But from a legal cost, I can just say that you're somewhere between $3,500 and $5,000 to do it from legal costs. Maybe more if there's other additional work associated with that, but that's just something to budget. And Oscar, you can talk about the marketing piece to that.
Yeah, the marketing piece is going to be, if you're raising north of $1 million, John said it best, 25,000 is not going to be enough. You're going to be doing advertising in Google AdWords. You're going to go into newsletters. So you need to budget appropriately to the raise. So, when you're doing, north of $1 million, you should be budgeting for somewhere between $7,000 to $15,000 a month for a period of maybe 6-7 months to give you that, because awareness doesn't come easy. It doesn't come at all. And Reg A, just so you're all aware, to give you a comparison, in Reg A, we encourage companies to budget between $200,000 to $500,000. Again, keep in mind they're raising up to $75 million. So, but we're just giving you high level numbers. Don't hold us to it. We're more than happy to introduce you to the proper people, as Marty indicated, that could give you exact figures based on your company. But for the foreign companies that are here, that are curious about how to use this regulation, before you start talking to marketers, because they'll take on anything, please speak to a lawyer, as Marty said, because it could be a good regulation for you to use. But if you have some long-term journeys on how to use other parts of the Jobs Act, it could be a hindrance going forward for you. All right, Joshua, we're going to let you come on in here. You got a question for us?
I have a two-part question. So the first part, if I have a company that's already publicly traded, does it matter if we're alternative reporting versus fully reporting to do the Reg A offering? And then the second part to that question is, if I have a stock transfer agent already and I use that portal you guys were discussing, or your portal, do I have to change my stock transfer agent if I do a Reg A?
Okay.
Yeah, I'll answer the first question, and then Oscar, you can jump in the second. On a Reg A offering, you said you're an alternative reporting. So is that just I presume that you're like an OTC
Correct.
company? Okay, that's fine. A Reg A Plus is, that was expanded to allow publicly traded companies, and whether they're reporting under the 34 Act or they're reporting under the rules of the exchange, that's irrelevant. So that's wouldn't be a problem at all. And then the transfer agent, the reason for a transfer agent is it allows you, as long as you have a transfer agent, then you're exempt from Rule 12G, and that the shareholder threshold's there to become a fully reporting company. Now, I suppose that would still apply, and you could still continue with your alternative reporting. You would also have to do the Reg A reporting, meet the Reg A reporting requirements as well. So there, might be two sort of systems or two sort of tracks you're having to comply with. Oscar, do you have any other thoughts?
Well, we snuck in a Reg A question for a RegCF panel, but no, Marty nailed it. I mean, it's pretty straightforward for public companies. You've got all the requirements there. So we got a few more minutes. Is there any other questions that anybody has in the attendees related to Regulation CF, raising up to $5 million, And again, just to reminding everybody that this is a regulation that you can raise with registered funding portals. Okay, that's one. And then two, you can raise it with broker dealers. So we got one here, Roland. Here we go, Roland. Welcome.
Hi guys, question for John. On your portal, do you allow your clients to have access to who's gone through the Invest Now page to actually retarget them if they don't go through with the investment, or do you keep that information like a lot of other platforms do? They don't allow the client to access who's been looking at the page.
Yeah, I think I don't think I'd like to actually answer that question offline. I'd like to discuss it actually with my point guy in terms of whether we'll permit that or not. So maybe if I could answer that, just to be realistic, because I think I'd be making it up if I answered it here publicly.
Yeah, we're putting the industry. Roland's got a valid question. With the marketers that are out there, one of the biggest components, people like Roland and others, all entrepreneurs, were asked to spend a lot of money to do our marketing. And quite often what happens is when you bring that traffic in, that traffic is gone, right? It's gone to the funding portal. They have no accessibility to it. So this could be a game changer move in the industry. It could drive more companies who say, hey, I'm going to do another round. I need that user base, even though they didn't invest in us since I paid for it on the marketing. So great question, Roland. Is there any other questions this afternoon?
If I could just add though, like our intent is to be as helpful as possible. And I'm just not sure what the regulations will permit us to do, not permit us to do in terms of that sharing. So I don't know if that helps or not, but I also want to add that like we've been discussing like all the marketing's on the responsibility of the issuers. With our platform, we're anticipating kind of like a SaaS model where if you want, we will help you do your marketing, because I almost see that our differentiation in the marketplace, like, you know, if you're a crowdfunding portal, you better be bringing people to your portal. Like it can't all be on the issuers. So we're anticipating that we'll be marketing our platform, and we've earmarked a lot of money to do that. And similarly, we'll be helping our issuers raise money on the platform with you know, marketing kind of guidance and best practices and that sort of thing. So I just want to make that point about at least our funding portal.
No, that's great. It looks like Roland's got one more question there. That's our last question. Roland, you're on. Let's see, is he asked to unmute?
You hear me?
Yeah, we can hear you.
As the industry is suffering from, you know, getting that exposure, it would be, you know, wonderful if we could all sort of participate as a group, as an industry body, being crowdfunding, and everyone pitches in some money that goes to general marketing for crowdfunding and getting, you know, new people looking at the different portals as an association. It might be early days, it might be wishful thinking, but I think everyone would benefit, you know, with some money going towards awareness as an industry.
That's a great point, Roland. Thank you. So it's, you know, as an industry, we'd all like to do things as a whole. I think we tried that, Marty, didn't we? Didn't we have an association in the early days? It's kind of broken down.
Yeah.
Look, we're in the early days right now. I'm excited because, you know, oh my goodness, 6 years ago, I published a book, Equity Crowdfunding 101. We had over 30 million copies downloaded then. It's a free ebook, and it's right back again because it's a new, but guess what? None of the things have changed. As Marty said, it's still the same steps. You still got to do the Form Cs. You're going to go through a funding portal. The only addition now is that you can go to a broker dealer as well. That's another addition. Again, it's different. And, you know, the nuances we're going to see different now, like what John is going to be doing at Fat Cat Club, is that they're going to take on that marketing responsibility. That is different. I'll be honest with you. That would be grand because up until now, the burden has been on the issuers, and that's a lot of work sometimes. So I want to thank both our speakers today and obviously all of you today that are in attendance. This is being recorded, which will mean it will be available on YouTube. You can subscribe. I do want to let you know there are 72 other webinars coming this afternoon at 3:30 this afternoon. We're going to be talking about Reg A, and we're going to start digging in very specific subject matter. Today was just kind of like overall discussions about the regulation. You're going to get bits and pieces from each of the different types of speakers we have. We have 192 speakers that are going to be participating in these webinars for you. So I want to thank everyone this afternoon. John, Marty, I'm envious. I love this guy. It looks great. Look forward to seeing you again. Thank you, everyone. Have a fantastic week, and we'll be seeing you very soon at the next KoreSummit. All the best.
Right.
Cheers.
Thank you.
Thank you, Oscar, for arranging. Thanks,
Take care.
Marty.
Yep.